all are here. Hello, everyone. I've just pushed record, so this session is now in record. Please just let me know you can hear me. Just say hi. Yep, cool. Hey, Mark, how you doing? Hi, Shane. What's up? A few people should be joining us as we go along, and some will be watching the recording back. Last week we talked about chart patterns. This week we're going to go deeper in our understanding of chart patterns, but this time I'm going to be teaching harmonic style trading, the basics of harmonics. I'm not going to be teaching X, A, B, C, D, E just yet. In fact, I don't really use X, A, B, C, D, E, and I may teach it one day even though I don't use it. Some of you might find it a good profitable style of trading or something to add to your already existing trading style. What I'm going to be teaching instead is a key component, a very important component of our market maker strategy that we use here at Wealth Mentor. So I hope you guys are excited. I hope you're ready to learn. I hope you got your pens and your papers ready. Before I go into this, we're going to recap what we looked at last week. I think some of you commented that it was the best lesson you've had. Well, I hope you enjoy this one even more than that. I think this one's going to be even more sensational than that lesson. We're going to be mixing two key components. Actually, we're going to be mixing a few key components, so it's going to make your trading style even more competitive. It's going to give you that extra competitive edge. Let me get my simple template. I like my plain charts. And I always tell people, start with the monthly time frame. I'm a very much a naked chart trader. The most you'll ever see me use is a stochastic, but I literally just like plain charts. I like my candlesticks. Again, just to recap some of the style we've been using something called caging, which is basically understanding support, resistance, and trend lines to ascertain where price is and where price is going next. We start with the monthly time frame. Monthly time frame gives us the big picture. So right now, I'm analyzing Euro USD. I found my key level of support on the monthly. This is a very powerful level because, again, when we get more touches on a level, we have a stronger support or resistance. We had touches several times on this same level, which tells me, prices remained above this level for some time, minus this area here where prices managed to bounce down, never returning to that level again. And so you can see this handle has held for quite some time. You also know there's some quite EU positive news coming out with Macron, I forget his name, sorry, winning the presidential elections. So that's going to boost the euro quite a bit because he's euro positive. He's not euro skeptic like Le Pen was. Now, let me delete all these levels. Now, I talked to you last week about something very powerful. One of the things that you always want to make sure when you're trading is that you don't just know where price is right now, but you can ascertain where price is going to next. And we looked at last week, yes, there is historical support and resistance where prices stretch back into the past and we can see previous levels and how they relate to the future. That's historical support and resistance. But there's also support and resistance in terms of setting targets. We call these support and resistance levels structures. We can see, for example, like I showed you last week, say we were back here in 1999. We can see, now remember, bullish trend is higher highs and higher lows. We can see that this was a bullish trend. Market makers were building confidence in the long positions. Look at that. The next significant swing high is right here. Do you see what happened just there? The high, the market went up. It pushed up, went up. Stop losses would have been placed beneath this low. People would be buying right now, expecting, what are they expecting? They're expecting the market to just keep going up. The stop losses are placed here. Market makers made sure they ran stop losses. Now, usually what I would say at this point, because we got a lower low here, I would usually say market has broken structure. Therefore, because this low was taken, we're looking to take out the next low here. Now again, this doesn't always happen in trading, but majority of the time it does. And that's a move that I would have lost. I would have happily lost that trade because I would have said the market broke structure. Therefore, what I would look for to get into that position, my target would be this, the next low. Remember, we call it scoring points. The bears scored points by taking out this low right here because the market rallied up. We expected it to continue. It took out the low. So what I would have expected to have happened is this. Let me show you my next move. So here it took out the low. I would have been selling around here. That would have been my sell trade right there, where the market dipped down, formed another swing point, a lower, you can see it's a lower high. I'm expecting now the market to do that and go for my next target. Once it breaks that, then I'm expecting my next low. That's how we use current level. We use pivot points to determine support and resistance as well. So again, we saw how market makers were building confidence in the longs, and that would have been a losing trade. The market then rallies all the way up. It keeps going. Look at this. Do you see that low then taken? That's in the future. We wouldn't have known this just yet. The market keeps building high, keeps building high. I'm looking at significant swing lows. Swing lows. And I'm going to show you how do we find swing lows. I'm going to show you in a second. Swing lows are basically where the market goes up, dips down and forms a low. It went up, dipped down and formed a low. Went up, dipped down and formed a low. The market then skyrockets all the way up to here. And look how market makers take the first low. Do you see that? Our first low is obliterated. So we know the next target is this low. They take out the next target. They take out the third target. Then we get a pullback. Again, on this pullback, I'd be expecting straight away that we'll be looking at taking out this target next. That's my next target. We can see the pullback rallies all the way to here. It doesn't form a higher high. And then look what the market does. Comes almost to the pip to this level. Takes out stops there. Rallies up again. Doesn't quite come down where we expect it to our next target. We would have expected the next low to get taken. But the market decides to do a little messy choppy, and then finally it takes the low that we wanted to take. Do you see that? So this is how we predict where the market is going to go to next, by the lows and the highs that it's taking out. Now let's look at the current market structure. Now, by the way, this isn't my lesson today. I just felt to recap this. It's not my lesson today, but let's look at the current market structure that's going on. What confidence is being built right now? Well, we had a lot of confidence being built in the shorts. Do you see that? Shorts are being established. Do you see how the shorts, how the market is constantly making lower lows? It's just going down, lower lows and lower highs. There's just this descending trend line going on. We're now coming back here. Now, if the market manages to break this structure, that's our first indication that it's going to the next high. That's just something that to look out for when you're drawing your support and resistance. Always watch market structure. Always watch market structure. Now, how do we find these highs and lows? How do we find these various highs? What determines a swing high or a swing low? This is the rule of a swing high and a swing low. A swing high is any candle with a candle either side of it that do not break its high. Do you see? These two candles did not break this high. That is therefore a swing high. Okay, that's a swing high. Let's look at a swing high right here. Can you see this swing high point just here? See that? Two candles next to it. One candle either side of it doesn't break its high. That's a swing high. Here's another swing high. Two candles next to it. Ooh, we're wrong here. Sorry, I looked at the wrong candle. This candle right here is the swing high. You see that? The two candles next to it don't break its high. This doji candle, here's the swing high. What's a swing low then? A swing low is the opposite. It's a candle with two candles next to it that do not break its low. That's how we determine swing highs and swing lows. Either that or you can use a tool on MT4 called a fractal tool. But you can see these two candles do not go past the low of this candle. So we have a swing low right here. You see that? Two candles next to it don't break its low. We have a swing low right here because the two candles next to it don't break its low. We have a swing low. There's some mini ones right here. Candle either side doesn't quite break the low. That's a swing low or a swing high. So that's the way we determine when the market's forming a swing low, swing high, swing low, swing high. You see that? That's microscopic or micro analysis. I'm hoping everybody understands. Just type Y if you get it. Got a few more people in here slowly but surely joining. Just type Y if you get it. Just let me know that you at least understand that so I can move on to where I need to. Good, good, good. Next level of support resistance would be this. Okay, so what I just ascertained is that price is in this sideways channel right now. On Euro USD, we have this very profitable, by the way, sideways channel. So where can you say price in the long term is looking to go? Probably back to here. So you could have been a long-term trader holding for several months, buying the euro up to here, but most people don't like doing that. But price right now is in this consolidation. Now notice I'm not drawing support down here. I'm not drawing resistance up here. I don't need to because this is the monthly time frame. I only need to use the monthly time frame to ascertain the monthly range. Remember that. Okay, because this is going to help us as we slowly build the trading strategy. Soon we're going to put every component together, and every week I'm going to keep putting the components together till you see that everything that we're teaching is complementing. On the weekly, I'm going to continue drilling down more into this area over here. I can see again additional levels of support and resistance right here. Yeah, I can see how the market just is struggled at this area. Yes, there's been some moments of fake outs, but it's really struggled to break this level. Now we're at the resistance of this level. We could be breaking through the basement into the attic right now, or sorry, into the upper floor right now of this this sideways range that's going on here. So that's the weekly analysis done. If you wanted to, I mean, you can start drawing trend lines too. Sometimes I like a good few trend lines to help me see or visualize what the market has been doing. And we can see again, we've had a downward sort of tilt. We haven't quite managed to break back up. Now the market could look to go back to highs over here. On the weekly, I'm drilling down a bit more, but I'm more concerned with this area over here. Oops, sorry, didn't mean to open that. More concerned with this area over here. Let's look at the daily and see what's happening. What kind of trend are we in now on the daily? This is what's important to start looking at. See, on the higher time frames, I was doing macro analysis. Now I start doing some micro analysis. What kind of trend are we looking at here? Well, this is the trend. It's bullish. So daily is giving us a short-term bullish trend. And it's sort of this upwards ascending channel that the daily time frame is in right now. I actually suggest selling Euro USD. I suggest selling Euro USD right now. This is a great short position. Can anyone tell me why? Can anyone tell me why Euro USD is good to short? Liquidity gap, yes. There is a liquidity void. We call these liquidity gaps where the market makes a gap, usually because of news. This would have been the French elections or something. I don't know. Something caused this liquidity gap where the market. It wasn't actually the French elections. I'm trying to remember what it was though. But this liquidity gap happened, and the market abhors vacuums. Eventually, it will look to fill the liquidity gap by coming down. But that's not the main reason. Sometimes liquidity gaps don't get filled. What could be the other reasons? Somebody, anybody? It's much simpler than that. Give me a simple reason why I'll be looking to sell. No, not demand zone, supply zone. We're in a supply zone, but I'm not teaching supply yet today. There's a simpler reason than that. It's not a demand zone. We're definitely in a supply zone, though. This is supply right here. I mean, you can stretch it all the way back from here, or you can simply go by this candle here. That forms our supply zone. But that exactly, simple as. I wasn't looking for anything yet, nothing too extreme, very simple. We have hit resistance. That's how simple it is. Nothing extreme there. We've hit resistance. We hit resistance at the top here. We formed an engulfing pattern. Do you see that? Second candle as an engulfer. Market rallies down. What does it do when it rallies down? What does it do when it rallies down? Let's look at this. So market rallies up, short-term retracement, pushes up again, breaks down low. In breaking down low, what did it break also? Structure. It pulls back up. What are we looking for now? We got a nice looking head and shoulders that looks like it wants to form as well. And now we are looking for our short trades on euro. Nothing complicated there. The only reason I'm saying sell, we're at resistance. Does someone want to tell me why this is a risky trade? Why is it risky to sell? Why is selling risky? Anybody? Let's try and answer these quickly because of time. I like sticking to time on our lessons. We haven't yet looked at what I wanted to look at today. So somebody tell me, why is this a risky trade? It looks like some people, because they may push the stop and bream? What's bream? And break, sorry. Yeah. And break the, yeah, that can always happen. See? That can always happen, but that's not exactly why I'm saying it's risky. What do we notice about the trade? Remember, one of the rules of trading, the trend is your friend. What kind of trend are we in? We've got higher highs and higher lows. What kind of trend is this? What kind of trend are we in? Talk to me, bullish or bearish? Quickly, students. No, we're not in a downtrend. Not at all. Not at all. Well, you may need to go back to the original lessons if you're saying this is a downtrend. What do you see about the highs? The lows are getting higher and the highs are getting higher. So are we in a downtrend or are we in an uptrend? Look at even the trend line. I mean, the trend line is giving it away. What kind of trend are we in? Exactly. We're bullish, strongly bullish. No way, Shane. We're in this together. We're strongly bullish. This is an uptrend. But I want to make sure everybody's recap the lessons. Go back over them. Make sure that you're understanding. We're in a strong bullish trend. The trend is your friend. The trend is your friend. Yes, Shane, you're right in that we're short-term bearish, but long-term bullish. The bulls are definitely, there's more buying volume in this market than there is selling. And the buying started way down here. And it's been rallying up ever since. But what sort of gives us the confidence we need to sell is the fact that the market, so it was doing this nice bullish move before, and then it broke the structure, collapsing all of the stops along the way, and then it did a huge rally up, nice head and shoulder pattern form. Now is the short sell on Euro USD. Now is the time to be selling Euro USD long term sell and hold on this market. Yes, it can look to run stop losses. Some conservative traders are waiting on the 4-hour time frame right now for some kind of stronger reversal pattern. They may be please try logging out and logging back in, but I think everybody should be able to see the screen. If you can't, please log out and log back in. Attempt that, but can everyone else see the screen? Just type Y if you can see it. Yeah, please log back out, log back in. You should be able to see the screen. There should be any reason that you can't. So we can see the prices have rallied up. What are we looking for? We're now looking to short the market. Now look, I use the components. I use the simple components we've been using all along. Other things you might want to include, nice trend line here. Do you see that? Simple trend line break. And what I told you, price breaks a trend line and also breaks the previous low. It will retest up sometimes, not all the time. And this has given us a beautiful entry because those who entered down here are now in minus for a bit. But this is giving us a better entry to sell, a better sell price than we'll get over here. So this would be a fantastic sell trade. You can put a real conservative stop there, and you can target the next low down right there, and that would be a great trade to make. Okay, so that's that. See, if a pattern showed up, great, but we didn't see any. You know, there was a pattern actually that we've seen. The pattern that we're seeing now looks like it's a head and shoulder pattern. It's not the absolute best head and shoulder I've ever seen in my life. Nonetheless, it is a head and shoulder pattern. Okay, let's find the shoulders and the head. Look at my previous lesson if you don't know what a head and shoulder is. Here is first shoulder, here is head, and here is second shoulder. Okay, not the best, definitely not the best. In fact, I would make the first shoulder like here. Therefore, your neckline is something like that. It's messy though. And here is your short happening right now. At least first target is here. Second target even lower down once the neckline breaks right there. That is your trade. And the only reason I'm not taking it is because I'm also in Euro NZD and it's got a similar setup. There's no point me selling the Euro twice. Similar setup. Do you see that? I'm in this trade as well. What did the market do? It rallied up, broke structure. It broke this structure here, pushed all the way up to here. I was hoping it would short today. It's 78.6, 86%. And what I'm looking for is the market to rally to my first target, T1, and here's T2, target 2. Okay. But you can see it's struggling at 86% right now. So it broke 78.6, we're at 86%. If it retraces 100%, all it is a double top formation. If it breaks above that, I'm out the trade. I'm closing. It means that the market has faked me. But that is as simple as I can make it. We also have a nice simple head and shoulder here formation. Not the best again, but there's the second shoulder. Yeah, that's forming. So we're looking at a short, and I mean, if you want some higher targets, it's there. So once it reaches this target, you can take profit off and leave the rest to run to the second target. Do you all get that? Just type Y if you get that, so we can start looking at AB equals CD. Just type Y. Idioma, I hope you're able to get back in. Oh, it says offline. I'm not quite sure why. But can everyone hear me? Just let me make sure that you're here. You're here, because I'm seeing people are in and out. I think something's going on with some people's computers. Can hear you. Okay, good. Good. Yeah, please keep watching them back. I'll keep repeating these every lesson until the penny drops. I'll keep on repeating. Okay. So today we're going to look at something that I love, AB equals CD pattern. It's one of my favorite patterns to trade. In fact, you're going to find it so simple you wonder why you didn't see it before. A simple chart pattern, AB equals CD. And the way we're going to understand it is first by understanding what a bullish trend is, what a bullish trend looks like. What does a bullish trend do when it is apparent? Let me draw instead. I'll use a black pen and I'll open a fresh page. Okay, cool. Let me use black pen to draw. Oh, it's not letting me draw? Why not? Oh boy. Great. I'm not quite sure what's going on. Guys, what's happening? Because some of you are in and out. Is there something wrong with people's internet? I'm not quite sure. Some of you you're just in and out of the chat. It keeps saying you've arrived when you were already here. I hope everybody's everybody's doing fine. Please let me know if something's wrong, because I'm not quite sure what's going on. I'm going to draw here on MetaTrader, AB equals CD. Very simple, okay? The market, again, a bullish trend is a series of higher highs and higher lows, okay? Now, this may go so fast that if you blink, you'll miss it because it's this simple. We look to this is called, now we've looked at caging. Now we're going to look at mapping. So title this market mapping. We're going to look at a map, forming a map for the market by identifying key structure. So in a bullish trend, the first point of the move is going to be called A. The first thrust, the first high that's formed, so the first low is A, the first high that's formed is B. The first low is C, and the next high is D. This is why we call it AB equals CD, because what we expect is that the length of the AB move will be equal to the length of the CD move. So we call it AB equals CD, okay? Now this is, you'll see me say this in the group, price is making a C to D move, or price is making an E to B move. A, B, C, D. The rules of A, B, C, D is this. B must always be higher than A. Basically, it must be a higher high. C must always be higher than A. It cannot dip lower than A. Otherwise, that is an incorrect structure. It must be a bullish trend and follow the bullish trend rules. A, B, C, D. We seek to start again. We always seek to start again. If we're going to do the trend count, we want to do the trend count until we come to the current AB boundary. Okay, so we want to do the trend count until we come to the current AB boundary. Now let me show you what that means. We start again at C. C, always start the trend count from C. C becomes A. Okay. D becomes B. So this D becomes B. And here is our C. And our next D is here. Now notice we're not yet at the current AB boundary, or where the market is right now. We're not yet at the current AB boundary. So again, we start the count again from A. So I'm just making sure that none of you are somebody just wrote, can't see annotations. I'm not sure what's going on with people's internet, but guys, if you've got any other programs open other than this, please shut them down. Any other internet programs, or if you've got loads of pages open on your computer, nothing is going to work. But let me just see, has my screen frozen? Let me just see. Because no one's telling me if it has. Mark, you wrote, can't see any. Are you sharing a different screen? Screen has frozen. Oh man, you guys have been talking all this time and I've just seen it now. This is weird. Okay, I'm going to unshare and reshare my screen. Please close anything you've got open that you do not need to have open. Let's just save on bandwidth if you're having some bandwidth issues. I'm going to unshare and I'm going to reshare. Type Y if you can see my screen. I'm resharing it now. Type Y if you can see my screen. Should be able to see it now. Okay, awesome, awesome. Okay, that's better. Sorry about that, folks. Let me start this again. Oh boy, I was talking to myself all that time. Okay, I'm now watching on my phone to make sure that I don't miss people talking, because once I share my screen, I can't see what people are saying anymore. But I can now see your comments and make sure that my screen is moving as well. Awesome. Okay, so right here, again, what I was showing you, draw this on your piece of paper. The key is to find the current AB boundary, which is where the market is right now. Say price is here right now. We want to map. We're calling this market mapping. You want to map the market. The way we map is we always start at A. Always start at A. A is the first low right here. B is the first high. C is the second low. And then we get D. Okay? Now we've got a full ABCD. The rules of ABCD is this. C cannot be beneath the previous A. And B, so C cannot be lower than A, and B must be higher than A. That means basically there must be higher highs and higher lows. It must be a bullish trend to be a legitimate ABCD pattern, okay? The way we find the next ABCD move, the way we find the next ABCD move is we start at C. C becomes A. D becomes B. This is the next C, and therefore here is the next D. Notice we're still not at the current AB boundary. Where do we start the count again to get the next AB boundary? We always start at C. C then becomes A, D becomes B. So now we have the current AB boundary. All we now need to find out, now we know, say this is Euro NZD, now all we need to know is where C will likely land, and we know that C will land somewhere. C will be somewhere around here, but it cannot dip beneath the previous A. So once we can discover where C will end, we can get in at C for C to D, and we know that the C to D move must be equal to this A to B. So our profit targets can be somewhere at the next high. Boom. That's our trade, and we've made our profit. Imagine if you could catch the C to D moves. Please type Y if you get what I'm doing right now. I just need to know that you're following. We're getting a bit more technical now. Notice things were very beginnery at the beginning. Good. Mark, you get it? Good, good, good. Now, let's look at this in a bearish trend. Same thing, same principle, but down. Now, please, I don't want you guys marking ABCD like this. Let me show you what some people have done before. Sorry, let me use a proper pen. So you can, what some people have done is this. They've gone A, B, C. Now, what's the problem with this? Tell me what the problem with this is. Thank you. C is below. It's a lower low. Once that happens, this can happen. The market could go the other way. So that's not a proper way to count. Okay? Now let's look at quickly in a bearish trend. Boom, 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 boom. First high is A. First low is B. Then we got C. Then we got D. Where do we start the count again to get the next AB boundary? Where do we start from? C. Good. C becomes A. D becomes B. Then we go C. Now, for those of you who watch this later, you will not understand this if you don't look at the first few videos. Okay, you really do need to. So here is A, B, C, and here's D. Again, we want the current AB boundary. So here is A, here is B. Now all we need to do is discover where C is going to end, because it's better to sell in this market. It's better. I mean, some people will buy the B to C move. Some people would be buying here, but it's better to wait. I did this today on NZD USD. I'm going to show you in a minute. It's better to wait. Here is C, and then boom, you got all of this profit, C to D. Do you see that? It's better to wait because the trend is your friend. You want to be a bear in a seller's market, not a bull. There is the better profit potential than that. Type Y if you understand what I've just done. Good, good, good. Awesome. Now let me throw a bit of mud in this water, just a tiny bit. The market can do something like this, because the market is fractal. Fractal is a way of describing that you can have trends within trends within trends within trends. You know, have a bearish trend within a bullish trend. You can have an ABCD within an ABCD. Let me show you. Okay, now let's look at this. The market has made A, B, C, D. Yeah? Start at C, A, B, C, D. Start at C, A, B, C, D. Start at C, A, B, C. Let's see how the next D didn't make a higher high. So what do? We start again from the top. A, B. Now we're bearish. C, D. Then we start at C. A, B, C, D. And we do this all the way down. And then the market again makes a higher high. So we start again. A, B, C, D. Start at C. A, B, C, D. Start at C. A, B, C, D. Start at C. So here is our current AB boundary. What are we waiting for? We're waiting for the market to dip and give us a new trade, right? But what we also notice, yes, there are ABCDs going on. But what we also see, sorry, let me just clear all this so it doesn't get too messy. Oh gosh, I didn't mean to do that. Oh well. What we also see is this. A, you see this? Capital AB. Sometimes you'll hear me say price is in a capital AB move. Within this AB move, there are several ABCDs, ABCDs, ABCDs. Then you might hear me say price is in a monthly B to C. If I know price is in a monthly B to C, I can drop down to the 4-hour time frame and be trading monthly bearish ABCDs. And then look at this right here, C to D. Do you see how powerful this pattern can be? If you can spot what's happening on the higher time frames, you can get in to the trade quite well. Should we look at this on the real market? Do you want to see this on the real life market? Yeah, let's do it. Look at this. Look at all the way from up here. I'm on the weekly time frame, by the way. This is a very powerful technique. Let's look at the monthly. Let's look at Euro NZD on the monthly. In fact, let's just go back to the weekly. I liked the way it looked. Let's just look at the weekly. Weekly will give us a similar view to the monthly with less noise. With more noise, sorry. But let's look at it. Let me get my screen sketch up here. And we can see what kind of structure are we in right now. Giant A, B, C. See that? Where is this market looking to go? If AB equals CD, what do you think is going to happen? You can extend targets all the way up here. Lower time frames, therefore, what are we? We're bullish on the theme. We're bullish on the theme, right? Now, look, within this entire AB, there was small a, Here's B. Let's look for the swing high. I need a swing high. That's not a swing high. Oh, this thing rallied all the way. It just kept going. I'm looking for the swing high. Here's B, small b. Yeah. Here's C, market dipped down all the way up to D. Then the market started to do B to C. And what did it give us? A, B, C, D. You see that? A, B, C, D. Yeah? Then we start at C again. Here's C. C becomes A, B. It went up to here, C. See that? Rallies down to here. Forms a lower low, D. You can look at the engulfing. You look at swing highs and swing lows. Remember that. Look at swing highs and swing lows. C becomes A. So A. D becomes B. Here's the next C. You see the swing high? C. And look how it doesn't go higher than the previous. There's C. Right there. If you got in on C, look how much profit you got. And that AB equals CD. That's your profit target. Boom. There's D, or you can go all the way down to here. It really doesn't matter. There's D. Boom. C becomes A. D becomes B. Here is C. And look what the market does again. Drops down lower. There's D. Then C became A. D became B. But look what happened here. We got a higher point. Now the count changes again. Here is A. Here is B. Look what happened. Here's C. Imagine if you got in there. This is the weekly. Imagine if you got in right there. AB equals CD. Look at CD. Boom. Still going. What's it doing on the way? Taking out structure. Taking out structure. So guess what you're waiting for? Now you know where your current AB boundary is, which is here. Guess what you're looking for? B to C. Boom. Do you see it? It's messy. It can be complicated. It can take some practice, but it's very powerful if you understand it. Very, very powerful. This is why we can sell. It's risky, but we can sell short term because we know the market's done A, B, C, D. We know it's done a new A, B. It's doing our B to C. We're in our B to C on Euro USD right now, but it looks like it wants to rally higher. Okay. Yes, it is. That's why I always say keep going back lessons. Go back to lesson 1 if you need to. So now we know market structure is quite bullish. We could drop down time frames, and look, if we drop down time frames, we could have said A, B, C, D. Yes, and then here is A, B, C. And the market looks like it could be rallying up. The only issue I have is this. The market went A, B, C, D, and then we went A, B, C. We had a drop down lower. We had a structure break, which tells me potentially this market, potentially, not definitely, but potentially, we can be looking at a short-term downwards move. It's risky. This is a very risky trade and not my favorite position, to be honest. One in which I actually wish I got out of today because I think this market is still very much bullish. And I shouldn't have really committed to this. I feel like I've made a bit of a mistake getting involved because you can even see as we drop down to the 4-hour, look what's happening. A, B, C, D. A, B, C, D. We're now A, B. It looks like it just wants to make one more dip back and push all the way to my 100% marker. That's what I mean by price is fractal. Get used to this week finding ABs. What I'm going to help you do next week, in fact, we got a bit of time. Can I move on, or do you guys want to digest this? Do you want me to keep finding ABCDs, or do you want me to move on to the other component of this system? Talk to me because I don't want to overwhelm you. If you want me to just keep on reinforcing ABCDs, tell me. If you want me to move on to the next component, tell me. Talk to me. Okay, that's enough for your brain. Okay. So let's, in the last 10 minutes, let me pick on any market and show you ABCD structures. Any market. Now, NZD USD was a signal I sent to the group today that unfortunately, because I'm purchasing a new car right now, I wasn't even in to take this trade. But I sent it to the group. Phenomenal trade. I'm gutted that I missed this because it did mega profit today. Both ways. It gave profit both ways today. Absolutely gutted that I missed it. And you can see this is the other component I want to teach you, Fibonacci, to make your Fib King. But I think it was, maybe I overestimated how much knowledge this particular lesson would take. But get used to ABCD patterns. Let me show you why I was so confident to short this when others were saying to me, oh, you should buy it. Let me tell you why. So if we look at the weekly, let's look at what kind of structure we're in if we go to the weekly. Let me delete this indicator, my Fib. Oh man, gutted that I didn't get in this trade. Absolutely gutted. Anyway, if we look at the structure of this trade, this market, what do you see? It has been A, B, capital, C, capital, D for some time. We start at C again. C becomes what? C becomes A. B, all the way up here. Let's swing high. C. Now, I'm suggesting C has not yet formed. The market looked like it turned around earlier, and now it wants to dip down again. Because the reason why I think C hasn't yet formed is because every other time we went up and we came back to this trend line. Went up, but this time we didn't come all the way back to the trend line. I would have been cautious at this point because it looks like it's not finished. It looks like C will form around here. We'll get a little dip lower, and then we're major long on this. If this trend line doesn't break, we're long for a long time. Excuse the pun. So what did I see? Even though I saw this major structure here, this major bullish ABCD move that was going on for some time, what was I seeing? I was looking at the short-term bearish structure. Let me show you what it looks like. I'm mapping the market. A, B, C, D. Look how the market rallied up, but it didn't break the previous C. So what does that tell me? Structure is still intact. A, B, C. Where's my D projection now? D. Do you see it? Is that a flag? Yes, it is also a flag. Exactly. See how, can you see how you're putting things together by yourself? I didn't even need to tell you that. But ABCD is also flag structure. It's flag structure. When you learn Fibonacci's, man, this is going to be even more powerful. It's going to be an even more powerful technique. But this is set to long-term short, long-term selling. Okay, look how we could have said, well, short-term it was A, B, C, D bullish. A, B, C, but look at this D. It didn't form a higher high. It then broke this structure, telling me that the market is doing the ABCD move bearish. That is my favorite position with NZD USD. And this is why even on the lower time frame, I was selling because I started to see the bearish structure. Everyone was telling me buy because they were only seeing the bullish structure. But look at it. It's been making bearish structural moves all the way home. And then today, this morning, I saw it broken this a pattern I didn't actually show you called the diamond pattern. This is a diamond pattern. I did this, I posted this trade in the group last week. This pattern here is a diamond structure because price is consolidating into like a diamond style of trade. It's not a triangle. The market then breaks it. When it broke it, look at this. This was the A to B, B to C, C to D structure. This whole thing. Okay. Let's just, I know I've drawn it a bit messy. Let me do it better so you can not be confused. A to B, B to C. Okay. Now we can say, well, look, the market went A, B, C, D, E, you know, it went messy. But let's excuse the mess and just say that this is A, the low here is B, the market forms C, and this is D. Let's just excuse all the mess. That's D. Yeah, there was a choppy move here of a bullish A, B, C, D, but really the intention was a drop. I could see that coming because I've been looking at the market for too long. C becomes A, D becomes B. Here's your pullback. And I actually put this trade in to buy a risky B to C buy. See, sometimes I do a B to C buy because I know the market's going to do a B to C move. See how it didn't break previous high. So here is the C to D move happening right now. Boom. Unfortunately, I missed my entry. I'm not about to chase the market and get in now. Gutted that I missed my entry. But I'm not going to chase the market and get in now. It's going all the way down to my profit target, which is down here. Any questions as we look to close in 3 minutes? Any questions at all? It's a complicated lesson. You can see each lesson, good. You can see each lesson is going to get more and more complex as we go along. It's going to get slightly more complex. Yes, good. You're starting to see the matrix code. That's literally how me and my fund managers describe it. Soon you just start to see it. It becomes like second nature. You start to see it everywhere. It's an additional tool with your support resistance, your caging. I mean, if you can spot A, B, C, D structures, you can be spotting what the market's doing. You can keep capitalizing on trades. A, B, C. There was your trade. D. A, B, C. There was your trade. D. A, B, C. There was your money. D. Now this only works in trending markets. Don't look for sideways markets like here. A, B, C, D won't work here. A, B, C. Market drops. A, B, C. Market drops. Takes out highs over here. Now trend count starts again. A, B, C, D. A, B, C, higher high, D. A, B, messy, messy. It starts to go lower instead. So we get A, B, C. See how the high didn't break the previous? Then we have this huge D drop. That's ridiculous. Then we got A, B, C, D. Then the market broke high, so we got a bullish A, B, C. There's your entry, D. Boom. Then we got bearish. We got A, B, C, drop to D. Yeah? Now, if you're finding it hard to find swing highs and swing lows, go to Insert, Indicator. Okay? Then go to Bill Williams and type fractals. Okay, if you click on fractals, so I'm just checking what questions you're asking. Okay, good. If you type on fractals, you can see these things show up. Can you see them? These gray things. These are showing you where your swing highs and swing lows are. Now, unfortunately, it doesn't mark all of them. Like it didn't mark the swing low around here. That's why I prefer just to use my plain eyesight. You can see A, B, C, D. If you want to use fractal indicator till you get used to marking off swing highs and swing lows, or if you want to change your chart view, that might be better. If you change your chart view to a line chart, you can go A, B, C, D. Ooh, A, B, C, D, A, B, C, D, A, B, C, D. And bearish A, B, C, D, A, B, C, D. And you can change the view until you get used to seeing it. But I would like for all of you to learn how to do this. So homework for the week, and I want to see it from everyone, even those who aren't. I don't like calling it homework. Let's call it practice for the week. And I'd like to see it from all of you, even those of you who weren't in today's lesson live. You're going to be watching this back later. Please, what I want you to do, mark off ABCD. Start with your major. Start with your monthly. Tell me what structure we are based on the monthly. Mark it. If you want to type on the screen, just click the letters here at the top of your MetaTrader software. Tap and then type A. Sorry, I did the wrong thing there. Text properties. So in the text box, type A. Boom, there's your A. Then grab a B and stick it on there and put B. There's your B. Yeah? And mark it on your MetaTrader platform and then send it to the group. Tell me, well, oh, I feel like we're in a C to D move right now with several mini ABCDs on the way up. Yeah? I'm telling you, this will be your bread and butter. If you learn market structure using ABCDs to map the market, it will be your bread and butter in the trading industry. I hope everyone enjoyed today's lesson. I'm going to give 1 minute for questions. If you've got no questions, just so we don't sit here do nothing, please just type N. But if you've got a question, please ask it now or forever hold your peace. N says Mark. And I think the rest, some have been in and out of today's meeting. Some realize that they need to go back and probably watch previous lessons. Stefan, I think you're here as well. Not hearing much from you though for some strange reason, but if you're there, just type Y or N or whatever. But anyway, I hope you guys enjoyed today's lesson. It is recorded. It will be added later on at some point today, Stefan. Good, you're there, cool. It will be added later on today to the student analysis beginner session. It's now starting to leak into a bit more of an advanced learning session. Can you see we're now at intermediate sort of levels of trading? So please watch everything from the beginning, grasp and get a better understanding. I hope you guys had a good learning experience. I'm going to be sending some signals today. We probably will do some early bird analysis tomorrow morning. For those of you who want to be involved in my analysis session, you can watch me trade and analyze the markets live in the mornings. That happens at 7:30 a.m. before the pound, 6:30 a.m. before the pound session makes its major moves. It's for half an hour till 7 a.m. If you want to join me and trade that, that's fine. We're also going to start doing something called night owl analysis, and that's for those who come back from work in the evening, don't have time to be in our morning sessions. You can join me in the evening. I'll just leave my GoToMeeting live, and you can watch me or any of my fund managers trade the live markets. Hope you guys enjoyed today's lesson. Have a fantastic evening. Goodbye.